anyone holding at the start of 2023 is up nearly 50% since then. So I think for anyone looking forward, the risk reward next year is quite different. Over the next 12 months, I think something over 250,000 is possible, but maybe highly probable based on just this following this price cycle. By 2030, we estimate S&P earnings could be 600 to 650. And I think multiples will be higher because of the larger share coming from AI.
Tom Lee lays out his bold vision for Bitcoin's meteoric rise to $250,000 by 2025. From the halving cycle to pro-Bitcoin policies, he explains why this is no longer just a dream, but a highly probable scenario.
You know, I think that markets are at, like a friction point right now because we've had two really good back-to-back year gains. I mean, anyone holding at the start of 2023 is up nearly 50% since then. So I think for anyone looking forward, the risk reward next year is quite different. So I can really sympathize with someone raising cash like Warren Buffett. Part of his selling, he had been doing it throughout 2024, may have been in anticipation of potential changes in tax policy, like paying a capital gains tax increase. But that being said, if we didn't look at the level of improvement of stocks for the last 2 years, but just over the next 12 months looked at what lays ahead, I think someone can be optimistic because we know the Fed is cutting interest rates, but at a time when the business cycle is still healthy. In the 7 times the Fed did cut while we weren't in a recession, markets actually did really well over that period as the cost of money falls. And the second is that I think some uncertainties have been cleared up. I think so much of the summer, our clients were sitting on cash and getting nervous, and you could see it in the VIX index because they didn't know who was going to be president. But now that election is behind us, and while I don't think anyone knows what policies are going to emerge because there's a lot of radical policies being offered, including cutting government spending, etc., I think it's going to create opportunities for many companies. And I'd say that the way we would sort of look at that is we'd want to be looking at smaller cap stocks because they've really been held back the most. And the third thing I guess is constructive is by the measures of like how people have deployed cash, it's still a pretty cautious market because margin debt hasn't risen for 5 months now. So that's not typically a sign of euphoria. It's usually a sign of exactly what you said, people getting cautious. And even like investor sentiment, like AAII actually has fallen away. So we're at not that level like where people are so bullish that you have to start to turn bearish. I have modeled, and that's a source of positive surprise. Part of the reason we have stayed constructive on Bitcoin is the price is following closely the prior halving cycles. The halving cycle, for your viewers, is when the block reward gets cut in half. That happened earlier this year. So there's a reduction in new supply. And the sweet spot of that price gain as supply is cut starts to happen towards the end of this year and then into next year. And I think that has supported why we expected Bitcoin to be 100,000. And over the next 12 months, I think something over 250,000 is possible, but maybe highly probable based on just this following this price cycle. The second reason I think Bitcoin has maybe more upside than that is because the new administration has run on a pro-Bitcoin platform. And I think that the possibility of the US not only legitimizing Bitcoin, but making it a strategic reserve asset, I think raises what would be the possible price scenarios for Bitcoin. Because if the US government, as they intend, ultimately gets to 1 million Bitcoin, they'll be the largest holder of Bitcoin in the world. And they'd exert enormous positive influence on legitimizing Bitcoin. Yeah. We are also entering what I think is alt season. Next year is really when I think the crypto market could broaden. And this is where those who are really experts on crypto, and I know you run a crypto fund, actually are going to have some alpha, because that is actually when many altcoins could do really well. I think that the stronger Bitcoin is, the stronger the ecosystem becomes. And so many of these utility tokens and things that are tokenizing really start to have a lot of expected value, but I don't follow this as closely. Sean Farrell is much closer to sort of how to play alt season and, of course, Skybridge. Yeah, so next year could be a good year for Bitcoin, but then the alts do even better. So like what people would measure as Bitcoin dominance could fall next year. So Bitcoin's total share of the market cap would actually decline because other things do better. You know, Bitcoin 1 year from now, I think is something around 250,000. The cycle of Bitcoin turns a little bit down early next year, so maybe Bitcoin gets to the 60s, 60s before 250.
Tom Lee identifies key factors driving Bitcoin's trajectory. The 2024 halving cycle has already reduced new supply, historically leading to explosive price growth. Lee predicts this cycle could push Bitcoin past $100,000 by year-end and potentially reach $250,000 in 2025. Adding fuel to this forecast is the new pro-Bitcoin U.S. administration, which hints at legitimizing Bitcoin as a strategic reserve asset. With the U.S. potentially amassing 1 million Bitcoins, the stage is set for a massive price surge. Lee also highlights a potential altcoin boom as Bitcoin strengthens the broader crypto ecosystem. As macroeconomic uncertainties clear, small-cap stocks and crypto could offer massive opportunities.
I think that there is a lot of saber rattling because throwing 300% tariffs on products would be, of course, very economic. It would just create so much turmoil in the economy. But what I have heard from Chinese manufacturers, because I was on the West Coast this week meeting with some group of businesses, is that China has already reduced the tax refund for Chinese exporters, meaning like someone who makes an air fryer, if they were getting a tax refund from the government, that's how they're subsidized, that amount is reduced. They're essentially rolling back the subsidy. And I think that that will have the effect of negating the need for tariffs, especially because I think China's economy is a bit weaker. So if those tariffs were designed to get China to not try to engage in hostilities economically, I think it's actually probably working. I mean, that may be a surprise because I'm not sure it's widely known. I asked a lot of folks if they'd heard this, but that's what I've heard from a manufacturer. Yeah, I think it should, at least in the beginning, it makes sense to expect it, even if it hasn't been delivered. On taxes, as you know, a lot of folks have been writing that it'd be very difficult for the U.S. fiscally to actually extend or even expand the tax cuts. And I think the bond market's going to really ultimately decide that. And because if yields keep creeping up because of growing deficits, I think that it's going to be hard for the White House to accomplish that. I mean, the White House is watching the stock market. The stock market would come under a lot of pressure if yields keep going up. So I would say to me, even though that's a goal, like tax cuts, I'm not sure that that's going to be achieved without some way to convince bond markets that someone will pay the bill. And maybe that's because maybe you need a crypto strategy before you can actually do that. If inflation doesn't provide the visibility that it's falling and the labor markets aren't faltering, I think it makes a lot of sense for the Fed to slow the pace of cuts because I don't think they're turning hawkish. They're just simply trying to keep a lot of dry powder in case they need to make cuts later. And so I think their strategy makes a lot of sense, but also I don't think it's negative for stocks. But yes, I mean, it's going to be, as you know, like a lot of well-known investors have warned that, the U.S. does have a more tenuous fiscal position. So I think that's why the Fed is going to be very important in the next few years, really trying to contain market fears. S&P earnings next year are roughly 300 for, let's say, just sort of simple measures. And so that's why S&P 6000 is just 20 times earnings, right? Which I don't think is that demanding. By 2030, we estimate S&P earnings could be 600 to 650. And I think multiples will be higher because of the larger share coming from AI and technology earnings, which naturally have higher PE multiples. And so if you just apply a 20 to 25 multiple, you're getting, 15,000. So I know it sounds like people say, well, 15,000 sounds crazy. And 2 years ago, it might have sounded crazy, even though that forecast was in place more than 2 years ago. That forecast has been in place probably for 5 or 6 years. But, now that we're at 6,000, we're that much closer to 15,000. It's not a quantum leap any longer.
The crypto market isn't just growing, it's evolving into a powerhouse. With Bitcoin poised to hit new highs and altcoin season around the corner, now is the time to strategize. Lee's insights make it clear. The next 12 months are pivotal. Whether you're a Bitcoin believer or exploring altcoins, this is your chance to capitalize on a transformative financial revolution. Don't get left behind.